Hey guys, Brian Stevens over here at Mortgage Shots. I got my good friend, and I do say that good friend, Eric Bowlby, known for a long time. He's worn a ton of hats in this industry, the mortgage industry, wholesale and retail. He's been in title, he's in real estate. He's basically seen everything from every side. And today we're going to be talking about artificial intelligence because, as everybody knows by now, it's the big secret that was just unloaded. The Communist Chinese government has just released DeepSeek. DeepSeek, which is, Eric, I got to tell you, it's open source. The code is open source, meaning they gave it away to everybody. The billions of dollars that the United States has spent in artificial intelligence, and everybody uses ChatGPT, but there's a ton of platforms that we have right now, and there's billions and billions of dollars. Were all just erased a couple of days ago with DeepSeek because they came out with open source AI code that anybody can use, and all of a sudden it's made all of that investment null and void. I gotta tell you, I think this whole thing is a result of TikTok, and it freaks me out because I think the Chinese are 2 steps ahead. You know, it's like we're concerned over here in the United States who's gonna own a social media platform because we want to take it away, and China said, oh yeah, slam dunk, there you go. We're going to give DeepSeek away to everybody, and we lost, I believe it was $2 trillion in market cap yesterday. I mean, the numbers were extraordinary. But here's my thinking with my lender's cap on and real estate cap on and even title cap on here is, and I've seen this for years, all these fintech companies which started in your state out there in Arizona, where they allow these people to run rampant with financial technology, is I think a lot of these companies are looking at this and they're salivating that they get all this free code, then they're going to try to use the code to create the monster, the Frankenstein monster, to replace the loan officer. I think we saw this and it was just like a gift from heaven. Now, my whole pretense has been this, is that we in the real estate industry and the lending industry, we've always had somebody who's been trying to replace us, right? I mean, I'm a loan officer. The day I got into business, my competition who's better than me, they've been trying to replace me, right? And you know, the other part of it is, what's the washout rate for a loan officer? A 5-year washout rate? What percentage?
You know, I don't know if there's an official percentage, and I would even say it changes based off of what market you're in, right? We're in the market of, and I love your phrase that I'm going to mess it up, but you always say it's the loan officer prayer. You know, just give me one more good market. I promise I'll save my money this time. I would say in today's market, it's probably a 50 to 60%. You go by the COVID market, we were growing by leaps and bounds because it was just so easy. We were printing money. So I think it definitely changes. But every time you get in a hard market like we're in right now, right, there's not as many applications. People don't want to move up. They don't want to walk away from that 2.5%, 3%, 4% rate that they have. Then everybody starts trying to figure out, well, how do I get more business that costs me less? And if we're being honest, the most expensive part in the mortgage process is the loan officer, right? We want to make as much money as we possibly can. So it's kind of hard to blame the big banks and people who just want to have the servicing rights to say, hey, we need to figure out a way to bring the cost of acquisition. So yeah, it's the perfect market for them to release this kind of technology.
Yeah, but you know what? It's not even just the banks, because I don't want to vilify them. It's not just your employer. It's not just who owns your company. Of course, they'd want to get rid of you. If I can increase my profits tenfold by getting rid of you, why wouldn't I do it? But it's also your competition. It's your fellow loan officer who's hustling harder than you, who's working smarter than you, who's more consistent and persistent. You know, I was going to say our washout rate is probably about 150% right now because our numbers are shrinking because it's difficult. And when we run into hard times right now, we start to look longer ranging and a wider berth to find solutions to what we're doing. Now, this whole AI thing is an enigma for everybody because where does it lie? Is it the loan officer who wields the power of the artificial intelligence, or is it the owner of the company who wields the power of the artificial intelligence and makes it consumer-facing and bypasses that loan officer entirely? Now, thus far, we're seeing some of this AI that's being used effectively. And I know you've been looking at AI a lot lately, and you've been looking at it, I think, in a way that is going to, listen, technology in general, guys, if it enhances your ability to make money, it's good. If it replaces you, it's bad. Right there. That's it. So you've been looking at this in terms of kind of doing a lot of the busy work when it comes to quality of lead procurement, turning a bad lead into a good lead, turning a good lead into a better lead, turning a better lead into a great lead. It's not a perfect science, but what is it that you're doing right now that you think that you're finding success with?
Aside from the loan officer, to go to where I think you're trying to point this conversation, cost of acquisition of the consumer is your second biggest expense. Right. And part of the reason it is what is that duration of when they first start thinking about buying a house to when they actually do buy a house. And that's part of the problem that we have in our industry is I think I'm quoting something that I've heard a statistic given. I can't say I've ever read the report where it shows the data, but they say you got to talk to a customer at least 7 times before they buy your product.
So in today's market, it's not like the days of old. Information is readily available to any consumer. They don't have to call a real estate agent to get access to the MLS or to see what properties are available for sale. They can go to Zillow, they can go to Redfin, they can go to Trulia, they can go to whatever source that they want to get information on a house other than driving around the neighborhood calling an agent. Mortgage rates, you're no longer having to call up and ask or drive into the bank. It is readily available information. So now you have to decide where you want to get involved with the consumer in their buying phase, their duration of from start thinking about buying to I'm actually going to buy. And that's what you have to know how to do, is to go out and track behavior online.
Okay.
This is what everybody...
So what you're saying is AI is affording us to get in later in the game and win the deal?
Actually, it's getting in even earlier.
Oh, okay.
And taking them away from. So here's what you have to, you hear all the time with leads that you hear over and over. Anybody who calls leads, they always say speed to lead is important, right? If you work for Quicken Loans or Rocket Mortgage, whatever they call themselves today, they actually pay a premium to get the lead before it gets sold to 10 other people, because they know first to call. And if you can keep them on the phone for a long period of time, chances are you get the consumer. So you've got to get them when their behaviors are just starting.
Okay.
You're tracking, you're figuring out, you track the behaviors you want to, then you target market. You start a drip campaign to them based off when they log on, they're seeing what you want them to see. And then you get an interaction with your artificial intelligence. So they think they're asking questions because it's easy to talk to a computer more so than it is a human. Because humans, we need our commission, we want it now, we're a lot pushier. It's a lot easier to say, what are rates? And it responds back. Or what is the minimum down payment requirement? What would my payment look like on this house? All those are questions that they want to get answered, but they don't really want to talk to you because they're not ready to have that discussion. They don't want to be pushed. They don't want to feel pressure. So by first tracking their behavior, second, target marketing, and then the interaction with the artificial intelligence. Now, when it's time to talk to the consumer, they actually want to speak to somebody, you have already put yourself in the position to be, you're the one they're talking to. So you want to take them away, because if you don't respond to them, if you don't have speed to lead, or you don't get in front of them right at the perfect time, they have gone online to somewhere else, and then they are already talking to someone else. I saw a thing, in fact, I believe it was on your show. Did you do a show where Zillow sold like 300 million leads last year?
Yeah.
Yeah, and there's only 300 million some people in our country. So
listen to this. I'll tell you this. When I was running Listing Booster and we were generating over 100,000 leads a month, we would have these companies calling us up on a regular basis trying to buy leads who sold leads.
Yes.
We actually had Zillow call us up to buy leads so they could sell them to premier agents, and they were leads that we had generated before. I want to ask you a real quick question. I want to make sure I'm clear on this, because here's what I think I'm hearing is that you actually prefer the artificial intelligence over a loan officer or realtor at that early point, having a conversation with that client, because a loan officer or realtor is looking at that paycheck possibly, and they're going to press the issue and maybe scare them out of it when they're not ready to make that commitment, to where the artificial intelligence is going to slow the roll, simply answer the questions, and make that a safer environment for that consumer to continue at their own pace. Is that accurate?
I would say that's the first 50%, 100% true. If you've never seen the movie Tommy Boy, go watch it this weekend when Tommy is trying to sell brakes and he feels the pressure of selling his brake pads and he destroys every sales opportunity he has. Right. And when he finally calms down and he understands it doesn't really matter whether they buy or not because he just wants wingies, Tommy wants wingies, then he becomes a master salesperson. And so, yes, absolutely, that is 50% of it. But just as important, here's what I've known after managing thousands of loan officers and thousands of real estate agents, is most people do not stay in contact with their leads. Oh, that's what you hear all the time. Leads suck. How many people have you talked to over the years, Brooks? I know you've been in this business. How many people say leads suck?
Oh, everybody does.
So the leads suck depending on where they are in their buying process. If you get them too early, they suck because they don't want to talk to you.
Right.
And then what happens is the loan officer stops following up, or the real estate agent stops following up. The AI just stays in contact with them. It continues to stalk them. It sees when they're moving further down the buying process, and it's staying top of mind. And then when the consumer is ready, now you have cultivated this entire time. So now it's a more meaningful call when you're hopping on the phone, because now they are in the buying position. So if you are capable of keeping up with that many phone calls, which most loan officers are, hey, congratulations, more power to you. I'm more of a leverage person. I want someone else to go do the hunting. Like if I was going to go fishing, we were talking about technology. Years and years ago, you went fishing, you went out, you tried to find, talk to local bait shops. What's the best bait? What's the best this? Where's that? And then you'd go to a place saying, I think there's a fish here. Let's fish over by this tree. And then a genius comes up and is like, hey, let's get a fish finder. Let's just drive out there, find where the fish are, drop our bait down, and we increase our chances of catching the fish exponentially. That is what AI does for cultivating buyers and or listings and or cash buyers. Like if you look at the people who are really doing good right now, they are good at tracking online behavior. They're good at target marketing, and then they have a follow-up system. And most individuals are not capable of being that follow-up on their own. I know I'm not.
Oh, Eric, I can tell you when you're saying this, I can tell you right now, with one eye shut, this kind of stink eye in this thing, and everybody's the same. I'm sure that I have lost 2 deals for every one I closed. And this is one of the maddening things is we'll even get this way with realtors, loan officers working with realtors. We'll get up to the point where they'll give us their attention. And once that's over, it's kind of like the hunt is over, move on to the next. And we're not doing all the follow-up stuff. I'll bet you the vast majority, if not all loan officers, for every deal you closed, I'll bet you missed 2.
I could tell you from ours, historically over the years, I would say internet leads typically convert right around 1%. And by the way, that's fantastic. It depends on what your cost per lead is. Just by adding our AI component, we have gone from a 1% to a 4%. So we're actually 4 times the return by having the AI component on top. 4 times.
And so you allow AI to kind of procure these leads up into a point, and by the time your loan officer is jumping in, so I hear 4%, and I think, oh, so I got to make 100 phone calls. What you're saying, no, you get 1,000 people. That means you got 40 deals, and the AI is doing the work for 1,000 people. By the time you actually have a human being, a living, breathing, fogging window human being jumping into the equation, that person's further down the road. So you're dealing with the 40. You're not dealing with the 960 others.
Yes. So to put it in a perspective that I would do, the best type of lead a loan officer gets is a direct referral from a real estate agent, because the real estate agent has told them, this is my guy, I trust him, or this is my girl, I don't mean to be sexist. This is my person, call them. They are going to take care of you. I trust them with your home buying experience. That's the best. This makes it to where it's almost the same, because by the time they're actually on the phone with you, it feels like they've been interacting with you, right? Because you are the AI. So by the time you're hopping on the phone, it's not quite as good as a warm referral from a real estate agent, but it's pretty darn close. When I say 4%, that's our close ratio. We're at a 40% of lead to application, 40%. When's the last time anybody that's watching your show got a 40% of the amount of leads to come in the door to fill out an application?
The numbers are phenomenal. And I want to let you guys know this. There's a study that came out a couple of days ago, and it was 26% of the people who wanted to buy a house last year bought a house. So that basically tells me 74%, 3 out of 4 people who actually wanted to buy a house, ready, willing, able-bodied people who wanted to buy a house, didn't buy a house, or more accurately, probably couldn't buy a house. So when Eric's talking about these numbers here, he's outperforming what the national average is. He's doubling it. He's lapping it. So just because you have somebody who's filling out an application, well, that's a person who's going to buy a house. Well, they might fill out an application and find out that their debt to income ratios are lower than where they need to be today. Might not be the case tomorrow. Rates might need to come down. But based on what's going on nationally, statistically, if your numbers are accurate, you're killing what your average loan officer is. It's going to put you in the top 5% of mortgage companies in the country.
Yeah, it makes it easier. And if you're not already looking at it, I hate to say it, but you're already almost too late to the thing. So you better get with somebody that can coach you, show you how to do it, and help you procure more data. I know in talking to past friends in the business, real estate agents in the business, everybody is down this year. I think everybody's feeling the pain of this is a down year. I would argue on some points we forgot how to sell. Right? COVID was so easy. We weren't salespeople. Now we have to be salespeople. We forgot how to do it. And the other part is I'm not getting enough bats anymore. Well, the reason you're not getting as many bats as you once did is other people are figuring out how to get to the consumers in an easier way. They're fishing with fish finders, and you're going out in the lake and just casting your line out into the water. It makes a difference.
Well, I think I understand what you're saying. I always say it's like, okay, so my marketing piece, I need to ensnare somebody in my web. When somebody raises their hand and makes their home buying intentions known, my marketing is intended to capture that person. Getting them earlier in the process, I would assume, is like if I think of myself, like my wife, for instance, I'm going to use her as an example. She will go look at houses all day long, but she would never call a real estate agent off a sign writer. She would never do it. And she wouldn't do it because she doesn't want to put that person out. I'm not going to buy the house today, and I don't want to waste her time. So she drives by. Little does she know that real estate agent would pay good money for her to call her at that moment.
Right.
Okay. So then the question then becomes, how do we get somebody like my wife, who is 50-year-old, wonderful, beautiful woman 101, she's all over the place. How do we get those people to engage us? And I think that's what we're talking about. How do we get the engagement of that person who's not willing to engage you yet, and then feed them the information on their terms, not on my terms, because I'm going to be a pushy salesperson. Buy shit or get off the pot type of thing, right?
Yep.
But what you're saying is we get them early, and then we slow our roll with them.
Allow them to do it at their pace. But again, don't forget, it is a target marketing based off of their online behavior. Once you have them in, that you've identified them, and you continue to stalk them, you still help push them along, but you're doing it almost subconsciously, right? I was thinking about buying a house. I looked at a house on Zillow. We saw the behavior, and now we start dripping. Oh, if you'd like to have access to look at houses, click here. You take them off. You don't want them going to Zillow, because if they go to Zillow, they're going to be sold to somebody else, right? Yeah. So you want them on your platform. I remember, it's like 20 years ago, there was a program we used to use, and they're probably still around, called HBM, Home Buyers Marketing. And what it basically was it was the very beginning stages when IDX feeds were coming out, and they would give out IDX feeds to their consumer, and then they would track and go like, okay, they would let you know when this guy was getting closer to making a buying decision. Oh, by the way, they've logged on. They've spent 6 hours on your site this week. They've looked at the same house 10 times. This person's getting ready to buy. Call them now, right? You need to have systems like that to make sure you're taking them off the internet. Because if they feel like you're not safe, that every time I call and talk to Brian, that I'm going to get strong-armed into making a decision I'm not ready to make yet. I just wanted some information. And maybe I just wanted to daydream today. I wanted to think, oh, what if I got that 1 acre lot versus the 8,000 square foot lot I'm on? What would that look like? Or, I'm in a 3-bed, 2-bath, and I really want that 5-bed, 3-bath. And I want to see what's the newest looking amenities people are putting in their homes. Are they doing that new farm fresh look? Or are they doing back to Tuscany? Like, I just want to see, I want to daydream for a little bit. Well, daydreamer's not going to make a buying decision, but pushy salespeople, we want to push them. Just drip on them, target market. And when they're ready, that's when you engage.
You know what I actually like about this a lot is I've spent the past 20 years trying to change behavior. That's what we do, right? I got a book club that I do on every Wednesday for loan officers. We go through and we try to change behavior. Okay, time block, make your calls, do your this, do your that. What you're not talking about is changing a behavior as much as you're talking about engaging a technology and a strategy. And that's a fundamental difference, because changing, if you've ever read the book Atomic Habits, it is a veritable impossibility to change almost any habit we have, especially if you've been doing loans for a long time. To get you to go in and change what you're doing, your habits, both good and bad, is difficult. A habit is like a weed. When it starts, you can pull it out of the ground very easily. We know the story. Then as that weed grows, it gets roots and and once our habits become entrenched in us, it's like trying to yank a tree out of the ground. So we're not talking about changing habits. What we're talking about is engaging a technology and a strategy where then us and our habits can engage in it. And the thing is if you are dealing with, on the Pavlov's slobbering dog type of thing in a reward system, and if you're closing deals at a higher consistency and a higher rate, then that's an easier behavior to really kind of jump into. So you've engaged a technology that will change the behavior rather than sitting and trying to talk somebody to better practices.
It also helps in that it's going to get you more at bats. Part of the reason we're pushy is we're operating off of a scarcity mindset. If I don't close this person, I won't make my mortgage payment. But if you know you've got 100 more people coming behind them, you're no longer in scarcity, right? And so the key is enough at bats, and don't be the Tommy boy salesperson. Let them come to it. It's a much easier sell, and it's going to be a better enjoyable experience. And when it's a better enjoyable experience, that's when you get referrals.
Why won't you buy now?
Have I not sold you hard enough? Why?
Do you realize that it's my kid's birthday next month, and if I don't close this deal? No, but it is true. And I don't mean to make light of it, but the scarcity thing is true, and it will change kind of how we can approach somebody. And if we go too fast, too hard, like I said, it's get 'em 101. Everyone likes to buy. No one likes to be sold.
Yeah.
So this is really cool. And guys, watching this right now, here's what I want your big takeaway to be. We're hearing all about this DeepSeek. We're concerned that it's going to replace us. What we have to do is rein it in and make it work for us. That's the big difference. What I love about Eric, and the reason I wanted to have this conversation with him today, is we've been talking about this for probably a couple of months now. He didn't just wake up and start this yesterday. This is a long, methodical approach to get to a place to where it's starting to really yield results for him. And this is a way, a perfect example of how we make our market and our situation work for us, not against us. AI, don't be afraid of it. Listen, AI, like my generation and my children's generation, they're still going to want to buy from people that they can poke. But after that, I mean, I don't know. Eric doesn't know. So for the next 20 years, we certainly are going to have a job. Could it be harder? Is it going to change? Absolutely. But this is a way to not be afraid of what's going on. Listen, me and Eric are going to be talking on a weekly basis. Today, we wanted to talk about this DeepSeek because everybody's talking about it now. And we wanted to show you a perfect example of what you can do to really kind of make this work for your business. Now, this isn't just something in theory. This is also an application. If you'd like to learn more about what's going on with what Eric is doing, all you have to do is fill out the information down below. You can give Eric a call. You can give me a buzz. And we will certainly point you in the right direction because, guys, we are looking for solutions that are practical. We are pragmatic and practical on this thing, and that's where it begins and ends. Eric, thank you so much for your time.
Hey, thank you.